All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and today is Thursday, March 2nd, second day of the month. So themes of the day, we will get to those. Before I get to those, risk disclaimer in front of you. Everything that we're going through is for information purposes, not giving out any advice or recommendations. Please read the full risk disclaimer there. So yes, themes of the day. I would say a pretty strong rebound from the lows. Crazy when you look at the VIX at this point is back below 20, and the sideways market continues. So today was a nice rebound. I will go over some levels to watch, but this was very different. I was just talking to a couple of Tribeca Trade Group members about this, and no, that's not what I was looking for coming into today. It kind of looked like we were taking the next leg down. And if that does happen, right, the level that I'm watching is 38.69, because one day is not a trend, right? This was nice. I would call it a kind of kick save for the day. But we're below value for the month. I did not do a video yesterday. So let me kind of just summarize that a little bit, that when we have a new month, we do get a new value area on the daily chart. That value area is based on all of last month's price and volume activity. So notice that the bottom of value is all the way up at 40.58. We haven't started a month below value since October of last year. So it's been a while since we actually are underneath the value area like this. It's not the best setup. So we could continue to see what we've been seeing, which is kind of sideways to down, to downward price action. And I think you just kind of have to take it one day at a time. What I try to do in this market is play relative strength. I look for areas that are acting better than other areas. I look for new leadership, which I think we're definitely, onto and seeing different areas of leadership. But I would be cognizant that, we haven't really reclaimed much here. So, I think also that the way that you look at the market, the way that the market is positioned, if you look at some of the like oscillators and overbought, oversold conditions, pretty oversold. Considering, if you look at this price action and where we've been over the last couple of weeks on the 1 hour chart here, it's been from the upper left to the lower right. So, eventually markets do get oversold, and, they bounce a little bit, and we saw that a couple of weeks ago too. We saw a little bit of a bounce too, because if you go even further out, here's where our high point was. And, markets aren't going to go straight up or straight down usually. So, I mentioned I thought that we would see continuation to the downside. Yes, I mean, the way that I kind of like to be objective about the markets and use the value areas is that if we begin to break down and break below the value area for a week, for a month, I'm going to, hedge myself, right? Because we are now trading out of a range, out of a range, and we're starting to move in one particular direction. Now, that doesn't mean that it's 100% guarantee that we're going to go in that direction. You have to reassess. So I put on a hedge. This was going back, I think, to Wednesday, where I put on a hedge in here in the morning. I actually took it off like 15 minutes later, and then I put it back on. And I didn't take any targets or anything because it's more of a portfolio hedge. And then I took that hedge off, after we crossed back into the value area. It's once you kind of separate your like emotion and feeling that you're, oh geez, like I don't want to go short or whatever, it's basically you're using signals, rather than saying, hey, I've got a bullish bias or a bearish bias, right? And adjust to what the market is giving you. I still see too many people. I'm on Twitter quite a bit, and I shake my head when I see people who are just 100% perma in one direction of the other. I saw somebody said that because the market went up today, they're like, oh, the market's broken. Now, that's the last thing that you possibly want to get in your mind, that when the market does something that you weren't prepared for, or that you don't think is right, you call the market broken. That's really amateur stuff. And if you start that way in your trading, that's fine. I think everybody kind of starts off that way, thinking that they know no matter what, because interest rates are doing this, right? There's nothing guaranteed, right? There's nothing guaranteed. Just because interest rates are going higher, that doesn't mean there's no 100% guarantee that stocks go down, right? That there's nothing in, is there a greater probability, the higher interest rates go, that the more of a headwind it is versus for stocks? Sure, right? But it's not 100%, right? And the reason why too is because the market doesn't work like that. There's all different types of market participants, right? You don't know how people are positioned. You don't know how short people are. You don't know how long people are. Pension funds, they don't short other, also, right? So they may be taking advantage of this dip and putting some money to work in different places. All different types of market participants, and not every market participant is going to say, oh geez, bond yields are up, that means I have to sell. Doesn't work. Some market participants do, but not all market participants. So just understand that there are these relationships that are can exist. But I think the last video I did was 2 days ago, and I talked about, just because crude was going up, it doesn't mean that energy stocks are going to go up that day, right? It just doesn't work that way. So again, there are logical relationships, but it doesn't mean that the market is going to always behave logically. That's how it is. It's a market full of buyers and sellers every single day, right? When you hear someone say, it's kind of the old expression, more buyers than sellers, or more sellers than buyers. There's some truth to that, right? Sometimes there's just there are more aggressive buyers, right, who are pushing the market, right? And that's just how it is. All right, so this is a little bit about market mechanics, and I've been doing this for a long time. I traded institutionally for a number of years. I traded all different types of areas of the market. I was an institutional ETF trader for a number of years at Merrill Lynch and Bank of America Merrill Lynch. And I'll tell you, you learn as you go along in trading that things could get worse and they could get better, without you really understanding. I remember when, for example, and I didn't really want to go into this detail in this video, but maybe it's a little bit helpful. But when the market made a low, right, back in, what was it, 2008, nobody wanted to buy then, right? Everybody was frozen stiff for the most part. And that's when the market made a low. And people didn't understand that then. If they're like, I don't understand, at that time, companies were still going out of business. Like if you saw what was going on Wall Street, right, you were afraid for your job, right? And that's when the market bottomed and it started to go up. So again, that logically didn't make sense either, right? Because you think, oh my God, things are so bad outside. Nobody's buying a house. We could be going into a major depression, and the market bottomed and it started to go up, right? So again, different circumstances. Of course, the Fed was doing different things at that time, but still, it was a pretty different situation. I don't know anybody at that time who was trying to time the bottom. What people were worried about is whether or not they were going to have a job. So that's when the market bottomed. So today, for instance, there was a Fed speaker that spoke, right? And that kind of got things going. But that Fed speaker didn't say anything really different than what the market is already pricing in. I try to show this screen probably every other video, right? But this is where Fed fund futures are pricing, right? So this was Bostic who spoke today. And perhaps just a little bit of, saying, we've heard, and here's the thing, we have heard from a lot of these Fed speakers, and they've been so negative. So perhaps one saying that, that they may be done raising interest rates in the summer, which is exactly what the Fed fund futures are pricing in. And this didn't change today, right? So first of all, for the next Fed meeting, 322, they're looking at 30 basis points, right? And then if you look at the high point of what the market is pricing in, it's not 6%, it's not 5.75. Right now it's 5.44. Now again, this could change. We've been saying, I've been saying this, I repeat myself all the time, but if the inflation data that comes out is much worse, then yes, we could see this continue to go higher. but right now it's waiting for more information, such as the next CPI report that we'll get in the middle of the month. But it's nobody's saying, like I was talking to again, another trader at TTG saying, oh, I heard it was 5.75. No, that's not what the implied rate for Fed Fund futures is. Again, it could change, but that's not what it is. The other stuff is predictions, right? Which people love to make. All right, so that's kind of bigger picture. Yes, it is concerning that interest rates, I mean, maybe this is kind of stabilizing down here, but when we look at the 30, again, you could look at various different rates across the curve. Remember, this is just Fed Fund futures. This is short term. This is the overnight rate. When you look at the curve, right, the treasury curve, the 2, 3, 5, 7, 10, right, this actually, you could see that rates are continuing to go higher. So we are at the point of the 10-year is at above 4. It's even more extreme on the short end of the curve, which actually did not go up that much today. It's at 4.8. I think it hit 4.9 earlier, so it backed off a little bit from there. But look at how much higher the rate is on the 2-year versus the 10. All right, so these things need to stabilize. I'm a believer of that, and I am worried, and I said it in our pre-market session this morning. Said I'm very concerned about interest rates going higher because yes, they are a headwind. So we'll see if this stabilizes. I would like to see this 30-year bond ETF get back above 124.12. And I would like to see TLT get back above 100 spot 28, but these things are do not look good right now. So the plan of action for me, and this could take place tomorrow, if we see more volatility tomorrow, right, and we slip back below 39.66, I'll put my SDS hedge back on. Right? It's just that simple, right? So right, so here's me taking this off, right, right in here. All right, so and here's my trades for the day. I had 2 shorts coming onto today. Just a partial position left in this ARC, which I had taken off the third target, and then I took this off later in the day. Right when the market kind of got back into the value area, right around 2 o'clock today. So that's what I did today. I also got stopped out in a couple trades today, right? Again, so right off the bat, if I have a stop, I'm going to take it, right? I'm not going to argue with it, right? Just like I talked about in the beginning of this video. AYX, which actually rebounded, right? We could actually look at this name. We could look at some of these names. But it's actually holding in here, but it hit my stop, I'm out. That's, and then I can always get back in. I could always reassess. For now, this is holding the 20-day moving average, right? This is a software name that had good earnings. I would like to see it get back above the 5-period moving average. That's actually where I was trying to enter the trade, right? Another one, the semiconductors were all over the place today. ADI did come back, but and it actually finished positively for the day, but I took this off right in the beginning of the day, right? And then I just began to reassess, right? Sometimes getting stopped out of a couple trades just allows you to kind of breathe a little bit and to reassess and figure out what the market wants to do. Because if you look, I decided to take off those which were kind of the 2 weakest in my portfolio, and I added to ATKR. Right. So this was, this is kind of what I've really been, trying to kind of, put out on things like my Substack page, right? Talking about where there's strength in this market, right? I put out a note on a couple of these names the other day. This is the wrong one. Let me just bring up the other page from what I was looking at. But I put out some new month observations, right? And I talked about a couple things, right? I talked about while the indices chop lean to the downside. Again, this was from yesterday. I talked about how the defensive areas are underperforming. Right? I don't want to be in these areas that are trending down, right? I've been getting a lot of questions about some of these pharma names. I get it. right? I didn't think that these things would fall apart like this either. But this doesn't look like a good chart to get involved in, right? I know a lot of a lot of retail traders who are not trend traders, and there's nothing wrong with that. There's various different trading styles, and there's multiple ways to make money in this market. But for me, when I notice something is breaking down, I don't want to be in it, because you have to ask yourself, like, and everybody has a different time frame too, right? If you're buying this here, where are you thinking that it's going to, right? Do you think it's going to go back to all-time highs, or back to where it was towards the end of December? Well, how long do you think that's going to happen? Is it 6 months? Is it a year? Is it 2 years? Right? So sometimes these things that are going down, unless you're just, you could always look for a bounce in some of these things too, but this is not showing me strength. It's showing me weakness, right? And I like to continue to stay in things where I see accumulation, right? Where I see, new possible leadership, right? And I actually like this biotech, which saw some call positioning today, but notice where it is. It's right into this downtrend line, right? And it's still in an uptrend. It's still versus the 200-day moving average. So, I guess the question that I have for viewers is, wouldn't you want to buy this, which is still in an uptrend, versus XLV that's showing weakness and in a downtrend, and has a place to bounce, and it's also seeing call activity after it's decent, and this is also off the highs. So, it's just a different viewpoint. And for me, I would rather go off of something that is showing, the better strength, the call positioning, and has the 200-day moving average as support. So again, like if I was, we kind of went over this idea earlier, but if I was to take this trade, where would I put my stop? Well, right below here, maybe giving myself, in case it took out this VPOC and rebounded. But what I would be looking at is right now it's at 82.42, right? I wouldn't be holding it past 80, right? So that's $2. That's your stop. What are you going to do for XLV if you get involved in XLV? Where are you going to put your stop, right? I mean, I guess you could use this VPOC as well, but then what, right? It's really tough for a name with a or an ETF with a sideways 200-day moving average to get any major momentum off of that. All right. So again, everybody's time frame is different. I get some people want to collect dividends and that type of thing, but I would rather wait until it shows itself that it has some momentum and some bite to it. All right. So that was one thing. And by the way, make sure that you're signed up for my Substack. It's free right now. So that was another note that, and again, you could go through some of these, but again, they're all trending. The defensives are trending down, which is again, much different than what we saw last year when interest rates were going higher. The semis group has kind of been all over the place. I've been trying to participate in that group, but it's been tough, right? There was this, a couple of traders played this bounce today in ACLS. I mean, pretty amazing bounce, pretty awesome. So congratulations. I did not trade this one. I do have this in the TTG trend portfolio, but I didn't buy the dip in this thing. We had some traders in the room, I think, buy this at around like 114. Really, really nice, day trade to get something like that to happen. What I did was I mentioned the ATKR. I also bought PI, which had a nice day. It didn't have that same type of move, but this is a name I like because it is trading in an uptrend, and there was insider buying in this thing the other day. So I took this trade off because I just needed to sell something at the end of the day, and I'll be watching to see if this thing breaks above 133 and takes that next leg higher. Again, can always re-enter. All right. Other observations where I see strength in this market is industrials, infrastructure, auto parts, metals, steel, and semis, right? Because there are some semis that are still, even though there was a flush today with involving Tesla, and Tesla talking about how they're going to be making some of their own, I don't know if they said making their own chips or not using some of the chips that they've been using so much. But regardless, the industrials have just been, pretty amazing, right? And I've been giving, a lot of this information out. I've talked about this AIRR ETF. Now I'm on overkill because I've talked about it so much, but this is like the nuts and bolts ETF, of changing the name because American Industrial Renaissance ETF is just too hard to remember. So what I'm calling it is the nuts and bolts ETF because it has engineering stocks in it, construction, electrical components, equipment, building materials, right? And if you notice, right, here's what the stock market's doing: sideways to down sloping. And what is this ETF doing? It's breaking out to new highs, right? So that's where I tend to look for. And again, it's a slower moving ETF. What I generally use ETFs for, besides owning them, is to kind of dig into the group and see where the strength is. So that's ATKR is one of those names that's in the group, and made a new closing high today. So nice move on that today. And I did add on the weakness. Other things that have been working for me: I took a target in PACAR. I added to that into a little bit of weakness. I've talked about Otis, right, which is another name. Again, slower moving things, right? Only up 0.5% today, but you look at the chart in this thing, and if I can get the chart to come up, it's not bad. By the way, Chris Verone was on CNBC. I think that he's a very solid technician, and he was talking about how much the industrials have been showing relative strength. Speaking of which, some of the bigger industrials, like a Caterpillar, was kind of breaking down a little bit, broke below its 50-day moving average, but look at it the last couple days, right? GWW is another one that broke out to new highs today. Again, these are showing strength. You have a gap up, sideways consolidation, and resolving higher. Right, that's usually how it works after a really strong earnings print, is you have follow through like that. So we are seeing that follow through in some areas of the market, right? And then of course interest rates. But look at, and I haven't updated this, but look at the relative strength, right, of this versus SPY. This from a graphical display there. Right, and I think I may have put that chart on Twitter the other day. Also, infrastructure. Right. So again, some of these names are overlapping. There's a United Rentals in here, right, which I think also may have made a new high today. So again, this group is getting overbought. But I'm just trying to broaden. What I try to do a lot of times is broaden people's horizons, right? Because if you're still looking at the FANG stocks, the Google and the Amazon and so forth, right? Those were the leaders from prior years, right? I get it. People get hooked on those stocks, and they are still a big chunk of the indices, but this is not where this is not a buying opportunity. All right. I don't think so. I guess unless you have 20 years or something like that, but it got rejected right at the 200-day moving average, right? Why go after these names? And I still see traders ask, like Google, same thing, right? This is not in an uptrend, right? It's sideways at best. But this is what happens with stocks, right? So I get sorry to do a longer video, but I'm making up for yesterday. But when I started my career, everybody used to tell me, "Oh, AT&T and IBM, those are going to be solid forever. They're the market leadership, and nothing's going to change." Right? You got to get over it. People eventually got over AT&T and IBM losing that key market leadership. I'm not saying Google and Amazon are going to go away, but the price action is telling you they can't get back above their 200-day moving average when the majority of the market is doing so much better. Or I should say not the majority, but a lot of other areas of the market are doing so much better. All right. Steel. Unbelievable. Look at STLD moving out to new highs. All right. I keep hearing about valuation. Oh my God, well, this market's historically expensive. Well, there's cheap stocks and uptrends. Look at US Steel. I think the PE is at 2, right? This saw some option activity today. Again, it's a slower mover, but you could look at the ATR of the stock and kind of position correctly with it. You don't have to, again, the ATRs are the average true range is going to be much different than a tech stock. But would you rather be in something right now in this market that's going up slowly, or that's oscillating back and forth without a trend? I don't know. The difference of opinion, and also there's a difference of how people trade. Some people like those movements to day trade. Allison Transmission. All right, had another, moved back above the value area for the month. All right. Again, autos, I'm not an expert on autos, but I've heard it's the auto market, like dealership. I've heard it's very difficult to get used cars, right? So there's companies that are going to do well with this environment. Another name that I got long the other day is CPRT, right? This is Copart moving up and to the right, right? So I'm looking for my next target on this name to be 73. All right, so those are some of the names that, so I made an error here, that's Pakar. All right, SMCI, we'll talk about this one too. And I'll talk about maybe 2 or 3 other charts, and then that'll be the end of this video. But again, this is tough because this name is up a lot. But I bought this thing into support here at the top of value. I did take a quick target in this thing, just because anything that's up this much, I try to take a quick target and then, position, because if it comes in and retests 95, 91 again, the top of March value area, I probably want to add that target back, right? To leave myself some flexibility. Another one too that I see people talking about is Uber, right? Uber made this nice move, from 30, went up to about 36, 37, and is now back down to 33. This looks like a good place, right? I saw someone else talk about Airbnb at this point. Right. I'm open to that too. I don't think I'll be buying this one, but, try to, it may kind of regroup here, and maybe it could push up to 130, right, which is the top of value. But I do like the Uber. I'll have that on my radar for tomorrow. All right, guys, that is it. I think I talked enough for today's video, but continue to stay open-minded and just realize that this is going to be probably some type of range-bound market. If it begins to break down, watch your levels and add a hedge versus some of the things that are trending up. Oh, this is one other name I wanted to discuss too. EDR coming out of sideways price action, right? Next level up on the daily chart is 26. And I think there's a closer one in here. If it kind of comes in a little bit, 2440 would be the next level up. There's another name that I've seen recent call buying. All right, guys, have a great night. See you tomorrow.